All right, guys, if you're joining me, you'll probably join me in a little bit because I haven't gotten the link out yet, but we're having a few issues with our live trading room. As far as I run a live trading room from Tuesday through Friday, 8 o'clock to 11 o'clock each day. And well, technology is not being nice to us today. So we're having a little bit of technical issues getting the room loaded up. So well, I decided we're just going to go live here on YouTube or Google Hangout, whatever this is. And we'll go through a few pairs and make the most out of a day, right? No need to throw the entire day away. No need to say, hey, let's just shut it down. We'll go through some pairs. We'll do some analysis. And we'll just have some fun here on YouTube, right? Give me a second. I'm going to try and get this link out. Again, I'm the worst with technology, so I don't actually know how to get the link out and share what I'm doing here. Oh, here we go. But I'll do that and we'll have some fun. Now, the only issue here with YouTube is that there's a bit of a delay. So typically in the live trading room, you guys can ask questions. I can answer them right away based on what we're viewing on the charts. What I've noticed on YouTube is I think there's like a 5-second delay. So there's probably not going to be as good of a Q&A as maybe what we're used to. But again, I'll try my best to manage it. I'm running my live trading room live on YouTube right now. Come on by. Word out. Let's get the word out. And let's do this. Let's do something here. All right. Share that. Let's just head over to StockTwits, get it out. And then get it over to our syndicate members as well, just in case they want to stop on by too. And then we'll get rolling. We'll get rolling here. I should probably close down the actual live room. Boom. End of it. Getting out of here. All right. Perfect. Well, all right, guys, if you just came in, having a little bit of issues with our live trading room today. Technology is not being nice on this Tuesday. So what I decided to do is we're going to do a little bit of a live session here on YouTube. That way to make the most of a bad situation. Now, difference here on YouTube is that the delay is a lot longer. Typically in our live trading rooms here, our delay is maybe less than a second, meaning as soon as I say something here live, you guys get it, and then you can respond with a question, with a comment, and whatnot. YouTube, the delay is typically about, I think, like 5 seconds. What that means is I'm not going to see your comment until 5 seconds after I've spoken, which makes it very, very hard for me to interact, but we'll try our best. I'm hungry for successes. Akil, how are this week's news events going to impact you? Well, it all depends on how they impact the market. We do have some news events coming up this week. The busy ones are going to be on Friday with our non-farm payroll. A sneaky busy one is going to be an interest rate decision for the pound, I believe, on Thursday. Now, right now, there's only, I think, about a 10% or maybe even less than that chance of them hiking interest rates. I have a sneaky suspicion. I'm going to do more research on this. I have a sneaky suspicion that it may be a lot more than 10%. And if that's the case, that may be a big surprise to the market. I think the market's kind of split between them staying and them needing to hike based on the inflation data and whatnot. But that can be, Thursday can be a very, very sneaky event. Now, the issue for me is I believe it's a 4 o'clock news release. I have to double check that again, but typically the pound releases news when I'm asleep. So that may not be something that I'm going to be able to watch live, which is not good. But busy news event week, but we'll handle it the same way that we always do. We'll come in, we'll look at the technicals, we'll see what is going on. We'll avoid the events that we need to avoid, and we'll look to continue our streak of extracting profits from the market. And we've been very, very, very good at that lately, and we're gonna keep doing it. We're gonna keep doing it. But nice, nice question. All right, where do you guys want to start today? A free live trading room session. Oh, what a beautiful morning. Where would you guys like to start today? Shoot me in a pair. That way I can kind of also kind of see where 7 a.m. Okay, perfect. That's better. Good. Euro dollar. Let's go to the euro. Everyone's favorite pair. Euro dollar. This is a pair that we have been long on in the syndicate over the last few weeks. Jason Greystone has done a great job at catching a few of the bigger moves here on the euro. And as you can see, we've been on the right direction of the market, looking for euro strength and dollar weaknesses. Now, we've currently ran into, you can't see it here. I'm going to load up a daily chart for you. I don't know if I have that much data loaded up on these charts. You can't really see it right now, but we're currently lining up with a level of structure support that goes back to June 2010. Now, let me just give you a trading view chart here. I'll show you exactly what we mean. I do think we have the potential to go higher. Yes, we're coming into previous structure support, which may act as resistance, but I do think we have the opportunity to still go higher. So I still have a bullish bias on the euro dollar, but like anything, we're not just looking to buy at any random reason, right? We're looking to buy at the cheapest price point. So if we look to buy here in the euro, I'm going to look to buy at the dips. And again, if we zoom all the way back out to June 2010, this is the lower level of structure that we're hitting, that we're running into. I think we can come a little bit higher than this one. I think we can come more into recent structure, either looking right here about 121.50s, or really maybe even coming into about 125s around this area. I think we can go to. So there's still room for upside in my opinion, but you want to be patient with it. So what I'm looking for here in the euro dollar isn't to buy right now. It's just not my style to buy after the breakouts on the way up. If you guys saw this, if you saw this weekend's Forex market preview video, I gave a good example of that, of kind of the drama, for lack of a better word, that you can get into when you try to buy late, right when the market reverses. It's funny, a lot of you guys commented saying, hey, Keel, I used to do the same thing. I would buy on the breakout up here, and then as soon as I would buy, the market would go against me, and then I would sell right here because I'd be scared to get out the trade, and then as soon as I sold, the market would rally up, and I was always behind the move. The market was watching me. And if you've been doing that, you're not alone. I think that's something that many traders have done. It's part of experience, and you learn from your mistakes. I see a question over on the YouTube. Do you use diversions? Yes, I do. Yes, I do. But what I would be looking for here, there's a beautiful, Alexander just wrote in, bearish 26.18 on the euro yen. There's a bearish bat formation there too at the same exact level, Alexander, that completed this morning. So you have a 26.18 and a bear bat there. So what I'd be looking for here on the euro dollar is just a retracement. I'd love to see a move back in these previous structure highs right around this 117.50 area. You can see this is where the market previously double topped. So market, we spiked up, right? We found some selling pressure up there, saw a little bit of a reversal. We came up again to test that level. And you can see that at least the sellers put in a fight. Now, obviously, ultimately, they didn't win. We broke out to the upside. But there was a fight that ensued at this level before breaking up. So a retest of this previous structure level would give a pretty decent opportunity for the next long entry. And it would also set us up with a really good risk reward. Now, even if you're shooting for a retest of previous structure highs, something like this, stop losses would need to go where? And there's a delay here. Let me see if I can just buy some time. 2618 sounds like military code. Well, you know, Jason Stapleton, right? Founder of Trade Empowered, ex-military. So we have stuff like 2618, Kiss of Death, Rules of Engagement, a lot of acronyms, IPDE, right? OODA loop theory, a lot of that stuff in our trading philosophy. This is longer than a 5 second, delay. Anybody? Where do stops need to go? Either that or you guys just don't know the answer. If we're looking for a trading opportunity right here, where would stops need to go? Anybody? Hey, Gabrielle, there we go. Right? Below previous structure lows. So you can see here on Euro-Dollar, you look for an opportunity. You can set yourself up with a pretty decent risk reward. And then, of course, the bulk of this move, right? The bulk, if you're going for it, would be shooting for secondary targets, which you can look for a continued extension up. And that's kind of what we're doing with pound dollar right now as well. We had a nice 85 pips on Friday, and then we're looking for an extension up about potentially 200 more pips. We'll see if that happens. But the secondary targets is where you really look for those home run types of trades. So that's what I'd be looking for here on a Euro-Dollar. There's not really much going on the lower time frames. Typically, I go all the way down to the day trading time frames. I don't think I'm going to do that today, just because usually we spend 3 hours here in the live room. We're not going to spend 3 hours here on YouTube. So I may just do my swing trading analysis. Give me a second. I'm getting pinged here. All right, but looking for a long opportunity on Euro-Dollar. We'll wait for retracement back into the structure level, back into our DSR level. For you guys that are unfamiliar, if you see this green box, this green and red box on my screen, this is called our DSR levels. It stands for dynamic support and resistance. Essentially, it just gives us a visual representation of previous levels of structure. So it's something that we use with our traders, with our newer traders, to help train their eyes on major and minor levels of structure. And then for experienced traders, they like it because, well, let's just be honest, we all like things that are colorful and shiny, right? So it just makes analysis easier, because this DSR level, this box here, this represents structure on the 4-hour time frame. So it just saves me some time. Instead of bouncing out to a 4-hour chart to find structure, then back to the hourly chart, I can just load everything up on one chart and see where exactly everything is here. So that's Euro-Dollar for you. Let's head over to the pound dollar next. The cable. And again, usually I'm checking the chat a lot more than I am, but because there's a 5-second delay here, we're just not going to do that. Please do not spam this, guys, because you do, you will get blocked. So sorry, ABS trading software, you have been blocked. I've banned you. Do not spam my live stream. How dare you? Jesse says, would you use a limit order to enter or wait to enter at market? I do not. The only limit order is a very aggressive order, guys. And that's basically, if you're unfamiliar, a limit order is basically when you do something like this. We just take, I can't do it on this trade because we're still in progress on this trade. What are we up here? I need to roll that a little bit. Go to some account. A limit order would be something like this, where you put a buy limit down here, and then you ask yourself, or you say, if price action comes to this level, then you're automatically filled. It's a very, very aggressive way of entering a trade. I'm personally not that aggressive. Aside from advanced pattern formation, so your bats and your butterflies, and you're not butterflies, but your bats, your ciphers, your Gartley, stuff like that, I don't use limit orders, Jesse. I like to wait for confirmation. So what I want to see on that Euro-Dollar is I want to see price action come into that kill zone. And then I want the market to leave me a clue, provide me with a clue that we're more likely to reverse than not. And there's pros and cons to that, guys. Understand that there's pros and cons to everything we do as traders, right? For a trader that uses a limit order, and let's just go back to Euro-Dollar, because that's the example we were talking about. 240, right? For a trader that simply uses a limit order, right? Say you put a limit order right down here. If price action comes down to this level, then what do you think is going to happen? Well, they're guaranteed to be filled, right? So if price action comes down, we nip, right? We just kiss, we just tickle, mwah, that level, and then we continue up. Guess who got filled the trade? The aggressive trader that used the limit order, right? Because they're saying, hey, you know what? I don't want to play any games. I have a specific price that I want to get involved in the market. If price hits that specific level, then I want to be involved. Now, that's the pro of it, right? You get involved in more opportunities. On the downside, however, right? What if price action just puts in a big engulfing candle all the way down? There's no type of hold. There's no type of anything. We just spike all the way down. Well, guess who stopped out of the trade? The trader that used the aggressive limit order, right? Guess who never got involved in the trade? The trader that waited for confirmation, waited for reason for entry. So there's pros and cons, right? The more aggressive you are, the more trading opportunities you're going to be involved in. So you're going to catch more winners. You're also going to catch more losers. The more conservative you are, right, the less trading opportunities you're going to be in. You may miss some of those winners that reverse, create maybe a V bottom and reverse right away, but you're also going to stay out of some of those losers. So what we work when we work with our traders, right, through what we have a training course called the Ultimate Trader Transformation course, right? And what we do with our traders is we really work with traders on finding a style that fits their personality. And I'm a big believer in that, because in general, the main reason traders fail isn't because they don't have the ability to analyze a price chart and find good trading opportunities. I think, that's a skill. Like any skill, it could be worked on. You work on it hard enough, you'll get better at it. Traders fail because of what lies between the 6 inches between their ears, right? That's the brain, right? Trading psychology. Traders fail because they've sabotaged themselves, right? Do me a favor right now. Give me a yes if you've ever sabotaged your trading, meaning you've ever moved the stop back when you weren't supposed to, you've ever taken targets early, you've ever entered a trade you weren't supposed to be in, you didn't enter a trade that you were supposed to be in. Give me a yes if that's ever been you. Right. And yes. I don't know. You guys can see the chats. You see the yeses coming. Yeah. That's what stops traders from being successful. Psychology. Now, some people just can't analyze a chart. That very small, very small percentage, but mostly it's psychology. So when coaching traders, right, when working with traders, my goal is to work on the trader on finding a style of trading that meshes with their personality. Because I think if you're trading a style that meets with your personality, you're more comfortable. If you're more comfortable, you're less likely to make mistakes. So, for example, if James here, I'm just using James for an example, right? If James here is a very aggressive person at nature, right? James is one of those people where it's like, hey, typical testosterone filled guy. I'm not looking left and right before I cross the street. I'm just going to run across the street and make it. Everything's aggressive, right? I want it, do it now. That's his mentality. It may be better for James to implement a more aggressive trading strategy, because that's how he is, right? Telling James, hey, you need to wait for a price action to come down to this level and then retrace and then come down again for a double bottom, a retest of structure before getting long, that may drive James crazy, because James is like, I'm aggressive. I know where I want to be involved. I know what I want. I want it now. And this is going to lead to some mistakes, because there are going to be opportunities where price action does like this. And he's like, oh, no, I knew I should have gotten involved. I wanted to get involved. I called it, but stupid Akil told me I got to be conservative and wait for a double bottom. And now I missed the move. And now he's all fired up. He's so emotional now. And guess what that emotion is going to do? It's going to carry over to the next trading opportunity. It's going to sabotage that next trading opportunity, because now he's thinking about revenge. He's no longer thinking about finding the next good trade. He's thinking about, how can I make up for the money that I just left on the table from the previous trade? Now, on the other hand, if we take Melvin, here, and Melvin is very conservative by nature. Yeah, if the chart's fuzzy, just make sure it's going to be on your end, because it's perfectly clear on mine, right? It's not me, it's you. That's what we tell the ladies. But let's say Melvin is a very conservative trader, conservative person by nature. Melvin's the type of person, hey, double check the paper for spelling errors. Let's make sure that no cars are coming before crossing the street. Piece of food falls on the ground. It's like, maybe shouldn't eat it. He's going to be better suited for a more conservative way of trading. Now, if we try to force Melvin to do an aggressive trade, I'm like, hey, Melvin, you've got to put a limit order right down there and you just got to buy it, right? He's not going to be comfortable doing that. He's not going to be comfortable being that aggressive. Melvin needs all of the clues, right? All of the stars to line up before taking a trading opportunity to feel comfortable. And if he does something like this, where he executes a trade down here, he puts his limit order and the market blows right through, and now he stopped out. Now Melvin's going to start thinking to himself, oh, I knew I should have waited. I didn't really get a reason for entry. I just put a limit order there. There was no sign of reversal. And then he's going to start having all this doubt. And what do you think is going to happen in the next trading opportunity? Well, he's probably not going to take it because he's full of doubt, right? And then that's going to open a door for more and more and more psychological errors. So we teach a handful of entry techniques, of styles in general, from the super aggressive to the very conservative. And it's going to be different for each person. That's the long drawn out point that I'm trying to make. It's going to be different for each person. But I truly believe that in order to be a successful trader, at least in the beginning, you have to find a trading style that meshes well with your personality in order for you to stop making those psychological errors. And then once you get experience, typically we see traders become more aggressive as they get more confidence. But at the beginning, find something that matches your style. All right, let's go back to pound dollar here. Pound dollar, this is a trade we talked about in this past week's Forex market preview video. Syndicate members, you remember we got long last week here on the pound. Now, zooming out, I hope I have enough data on this chart. If not, we'll bring up Trading View. Zooming out, we're coming up into a previous level of consolidation, right? You can see, look left, structure leaves clues, price action came down, and then we just consolidated, right? We did the up and down dance all the way over here before finally breaking lower. I think that we have the potential to come up to 134s, right? I think we have the potential to come up to 134. So that's where my ultimate target is laying, right? My secondary target is laying at 134. But what I'm doing with this trade is I'm actively managing it. So as price action moves up, what I'm doing is I'm reducing, I've already reduced risk on the back end. What I'm doing is I'm banking in profit on the back end of the trade. So last week we got involved in a trade here, right down, where we at here on pound? There we go. Right down here, right? We just gave this example on the euro dollar, right? Price action retraced. We got a double bottom. We bought it up. 87 pips later, we're feeling really, really good about ourselves, right? Now, most recently, and this is a process we go through, it's called identify, predict, decide, execute, right? So identify, what have we done most recently? Well, we've created a higher high, higher close. Higher high, higher close allows us to make the prediction that what will happen? What is most likely to happen after seeing a higher high, higher close? Akil, why is the entire Forex market moving so slow? It's summertime. Markets slow down in the summer. I actually think this has been a pretty busy summer, I'll be honest with you. But summertime, the markets tend to slow down. Can you please criticize my potential CAD Swiss buy if a double bottom forms around 77? Criticize me, Kill. I'm a glutton for pain and punishment. Tell me how bad I am. You tell me I'm a bad trader. Market should pick up pace in September. That's typically right. Sell in May and go away. But we identify, right? Higher high, higher close allows us to make the prediction that price action is likely to continue higher. Here's a question I like to ask myself. If price is going to continue higher, then how are we likely to get there? I already gave you a zone and what I'm looking for, right? There's two ways we can get there. The first way is we continue straight up. We do not stop. We go straight to 134 and never look back. What is the second way that we can get up there? Why? Good question, real quick. Do you believe I can learn to trade without any course? Yes. I do not think a trading course or a trading coach or a trading mentor is mandatory for success. I will tell you this. If you're looking for the shortest, most direct path towards success, then you're going to need to get educated. And I have this discussion a lot with traders because everyone seems to get offended by me suggesting that you need education, right? Well, you need education to be a doctor. You need education to be a dentist. You need education to be an accountant. You need education to be a mechanic. You need education to be a salesman. You need education to be basically anything in this world. But for some reason, people believe they don't need education to be a trader. And yes, you can be successful on your own. It's just going to take a lot more time. So the question I always ask myself this, right? Because I'm a firm believer in that I can be successful if I just try hard enough. If I'm going to learn to trade on my own, right, it's going to take me a lot of time. It's going to take me 5 years of education and donating money, right? Because you're going to pay for it one way or the other. That's the part you don't see. Either you're going to pay for education to get trained, or you're going to pay for education in the market by losing trades. So either way, that money's gone, right? So my opinion was always this. If I'm going to lose that money, right, I might as well lose it and get some type of benefit from it in a shorter period of time. If I get educated, that puts me on a quicker path to be successful, meaning I can make that money back quicker. If I simply try to do it myself, I'm still going to use that money in the market, right? Learning valuable lessons by taking losses. But instead of taking me maybe a year to get on the right track, it's going to take me 5 years to get on the right track. And now I've wasted an extra 4 years. And for me, time is everything. I don't want to waste 4 years. So what helped me make the decision is I was impatient. I said, hey, I want to be good as quick as possible. And I saw getting educated as a way to be that. You can certainly be a successful trader without being educated. It's just going to take you a hell of a lot longer time to do so. But you're still going to make the same investment, right? You're still going to spend money learning. Either you're spending money with a coach or you're spending money in the markets. Either way. But yeah, wait for a retracement. And what we have here, we have sort of the market losing steam, right? So the market's coming up, and you see how we start to tail off here a little bit. You see how the slope changes on this angle, guys? How we have a very, very steep angle here going up, high momentum move, and then the market kind of just is starting to trail off, right? This is sort of an ascending channel. And I like to pair this with divergence on the RSI. So you can see price action is sloping up. Our RSI is sloping down. Someone asked about divergence earlier. This is called bearish divergence. What I would expect is a little bit of a relief from this move. So I would expect a little bit of relief in the pound, maybe a pullback, right? And if we get that pullback, say back into our DSR level, right, either right here a little bit lower, that's going to be an excellent opportunity for those looking to buy the next move, right? So same thing we talked about euro dollar. Be patient, right? Wait for the retracement. Wait for the market to give you your reason for entry, and then look to hop on that move, right? In anticipation of the next move higher. So that's what's on my radar for pound dollar here. Thank you, Mario. Mario says, I recommend taking the Ultimate Trader Transformation course. It's expensive, but worth every penny. These guys opened my eyes to what I thought I already knew. And I tell you what, it is expensive. But when you compare it to industry standards, it's actually very not. We used to do this in our presentations. We don't do it anymore. But we would take another trading education company that we thought was quality, that thought relayed quality information, and we looked at their syllabus, and their main course cost about $5,000. Right. However, in order to take their main course, you must first take their prerequisite course, which is like another $2,000. Right. But then, right after the main course, there was another course. And the description on the other course said, now, if you really want to take the knowledge and learn how to use it in the live markets, take the master's course, which was like another $10,000. So before you know it, you're spending like $20,000 to get everything. We have some people complain about the price of our course, and people are going to complain about price. So, if we sold our course for $1, people would still complain. So that's just normal, right? I get people that complain all the time. Somebody was on YouTube today calling me a scammer and blah, 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 blah. Oh, if you're really a good trader, then you don't need to have people pay for services. I'm like, wouldn't you should give it out for free. I'm like, don't you see the amount of content I have on YouTube? I've got 500 videos on YouTube, man. Free trainings on our Trading Powered website. We have a free 2-hour workshop called Into the Gray. Free 2618 strategy. We give a lot for free. But people are always going to complain. But yeah, at least with our course, we're giving you everything we got. And I think more so is the support that we give. That's the most important thing. The coaching, the support of traders. But you'll never make everyone happy. So you just have to accept that. You can give something for free and they'll still be upset about it. But let's go to a different pair now. We did euro dollar, we did pound dollar again. We're going to stay away from the lower time frames just because I don't feel like being here for 3 hours on YouTube. I'm going to do something else productive. Hey, Tom. Let's go over to, someone mentioned dollar Canada. Dollar Canada, this has been my pair of the summer. Dollar Canada has greatly stuffed my bank account this summer. I love it. I love it. And dollar Canada has been a great example of a shift in analysis and why it's important to be adaptive in your trading. Because earlier in the year, we talked about this, I think, in last week's live trading room. Earlier in the year, I was calling, what was I calling, 140s? Yeah, I was calling 140s on Canada. I was confident that we would see a move to 140s, right? We saw sort of an ascending triangle breakout up here. We saw a breakout to the high side. I said, you know what? 140s look left structurally clues, comes right into a previous head and shoulders formation. Guys, we can go up there. And then what did the market do? The market started going south, right? Start seeing more Canadian strength, right? We started going lower and lower and lower. I was still looking for buying opportunities all in this level, right? I only got one, ended up getting stopped out for break even. But then as soon as we passed this level, right, as soon as we violated our previous DSR level, right, my bias switched. And this is a perfect example of not being locked into your trade, right? Understand, guys, trading is different than investing. Jesse says, I paid for the transformation course one time. My coaches still help me because my coaches still help me. It's been a year. No other company does that. TE courses are not expensive in hindsight. No, you get our mentorship for life. I've got traders that contact me from 4 years ago. You get our mentorship for life, our coaching for life. Always supportive. But understand trading is different from investing. In investing, you're taking kind of a personal bias in the market, right? Trading, you got to think of yourself as like a mercenary, guys. If you're a trader, you're a mercenary. You don't care if the market goes up. You don't care if the market goes down. All you care about is if the market's going up, how can I be long? If the market's going down, how can I be short? So it's important not to lock yourself in to a bias. And that's a pride thing, because we'll see traders do like this. We'll see, I see it all the time. It'll be up here. We'll say, it's going to 140. It's going to 140. Market will come down here. It'll violate previous structure, shifting our bias in the market. But the trader will still be screaming 140 because they don't want to look bad, right? You guys have been there. They don't want to feel bad. They don't want to be like, oh, I was calling 140 before. I can't just change. I have to dig my feet in and stick with my original analysis. Nobody cares. Nobody cares. And Jesse says lifelong coaching. Let me put it this way. Lifelong coaching is still as long as we're in the coaching business, Jesse. I don't want to be on my deathbed and have you guys come up and be like, hey, Akil, so can you help me out with this trading plan? So as long as we're in the education business. Now, we don't plan on stopping. We do have the conversation about managing money and starting a prop firm like almost every year, but I don't see that happening. We don't get the same benefits as educating, but as long as we're coaching. So I don't want you to hold me to, again, I don't want to be on my deathbed answering questions about the CAD Swiss. But we got to be able to shift our bias, guys, and take the ego out of the equation. Okay. Yes. At one point, the market told us that this is what's most likely to happen next. It didn't happen. That's okay. We didn't lose money, right? Now we shift our analysis. And once this happened, we started calling shorts on Canada, and we've been short ever since. We've been short ever since. I called 125.50s. We came right down to 125.50s and made a massive amount of profit on the way down there. The next question is, what's going to happen next? Right now, we're consolidating at previous structure resistance. So we're waiting now, right? We're patiently waiting for the market to show its hand. We're not trying to force any trades, right? We're waiting for the market to give us a clue. Hey, Akil, here's what I'm likely to do next. And then we're looking to take advantage of it. And right now, the market isn't giving much, right? We look at our chart here. We just have consolidation. Now, if you've been around me for a while, you know that consolidation breeds what? Who can tell me what comes from a consolidation when the market is all choppy and disgusting and it looks like nothing's there? For those who have the trained eye, what do they have the potential to identify? Yeah, man. Advanced pattern formations. Yep. Advanced pattern formations. And I'll tell you what, we have one setting up right now. And it's going to be one of my favorites because it's going to give me a really good risk reward, right? And this is going to be called a Gartley formation, right? So if I take my, I'm going to shortcut it here, guys, because I'm lazy, right? I'm not lazy. I just like, if I can do something faster, I like it. So I'm going to use my little toolbar up here. This is called our Constellation software. You guys have probably seen us use it in the past. It's a pattern recognition software, which helps us identify advanced pattern formations with a click of the button. Watch, boom. Right, pretty neat there. Pretty neat there, right? But we're looking at a potential Gartley formation, right? An X leg starting up at our previous structure highs right up here at 125.76. Swing high to swing low, that's going to be our X to A to B, B to C. You can see we have a CD completion coming up right towards previous structure highs, and that's going to give us a potential Gartley formation, right? You can see the risk reward is pretty good because it's a deeper Gartley formation, right? Meaning it completes closer to the X leg. And we're looking at about a 1.5 risk to reward, right? Which is a pretty decent risk reward ratio. So although there may be no bigger move right now as far as counter trend or trend continuation, right? The market's just churning, trying to make up its mind what's going on. This is the perfect time to look for advanced pattern formations. Because in this consolidation, in this choppy movement, that's where these bad guys lurk, if you have the trained eye to see it. So what may be ugly and disgusting to one trader could be a complete gem to another. Could be a complete gem to another. This is the dollar Canada. Again, I'm sorry, there's a bit of a delay here. This is dollar Canada. I'm just looking at the top left of your screen. It'll say the time frame in the pair right here. So pattern traders, it's early on, so you got plenty of time to get this on your radar, to check and double check and triple check again. But potential advanced pattern formation here on dollar Canada up at 125.58. Hungry for Success says, is there a bat formation on pound yen? We can look at pound yen next. Willie wants to take a look at gold. Nice. Yeah, gold had a nice, we had a nice move on. Did you see, we talked about gold as well. Did you see this week's Forex market preview, Willie? Talked about the head and shoulders on gold this week on there. Watch the YouTube videos, free videos, website, live room. Their ability to display good and bad, I'd say, is a portfolio of credibility. Yeah, you guys have seen the equity curve. I tell you, We'll show you the good and the bad, for better and for worse. We have zero shame. We have zero shame in what we do, right? This is this year's equity curve. And it's funny because we get this all the time, right? This is probably the worst start I've ever had to a trading year, right? And what stinks about it is, despite my robotic nature, despite that some of you guys see me as some type of like trading superhero, I just think I'm a normal dude, but I'm the same way as you. So I typically take off from trading. I typically take off from trading the last few weeks of December, right? You know, around the holidays, and I do the same thing you guys do. I review my trades from the year. I hope you're doing that, but I start setting goals. And I start getting excited, right? You guys get excited for the new year, right? Just like, you know, that person like, January 1st, I'm going to hit the gym every day and I'm going to lose 30 pounds. Whoa! Right? I do the same thing with trading. All right, fresh slate, right? Last year was good, but this year is going to be better. I'm going to do this and this and this and this. And you're so excited. You're so pumped up, right? And then you know what happens? This is change in percentage. You know what happens, right? You get so excited and then boom, straight against you. For you sports fanatics out there, it's like entering a game and you're pumped out, you're pumped up. As soon as your team hits the pitch, the other team scores within the first 10 seconds. You're like, ah, oh, come on, straight punch to the gut, right? And we looked at this, and we had a lot of new syndicate members come in because it's the first of the year and everyone's excited. And it looked pretty bad. And it's tough on our behalf because we're starting the year and you know, we have a lot of new members and they just see us consistently getting beat in the face by the market. But luckily, we've been through this before. I've been through drawdowns before. Jason Greystone has been through drawdowns before. Charles Miles has been through drawdowns before. Jason Stapleton has been through drawdowns before. So we have the confidence to know what's going to happen. I know that everything's going to be okay, right? Because I know that drawdowns occur every single year. What I don't know is when they will occur. And this one just happened to occur in the beginning of the year. But I told traders, I said, hey, invest for the entire year. We always encourage that people that sign up for the syndicate, they do the annual membership. Not only does it save them 50% on their membership cost, which is awesome, but it locks them in for a year and it allows them to stay committed and not just give in to those initial emotions, right? Because you see this initially, you're like, ah, these guys suck. I'm leaving, right? And then as soon as they leave, what happens? And they come back and be like, oh no, I missed all of that. And of course they join again right here. And everything that goes up must eventually come down. They join right for another drawdown and they're late again, right? But you have to have confidence. We show you the good and the bad. It's been very good lately. It was very bad earlier. You could even see the curve of, we've been doing our syndicate for 3 years here, or tracking stats for 3 years. Here's the curve month over month for 3 years. And you can see that there are good periods. There are not so good periods. There are great periods. There are bad periods. There are steady periods. There are periods of drawdown. Extension, massive drawdown. New structure highs, right? This is just what the reality of trading looks like, guys. Don't be fooled by the idea that you're just going to come in and make 1,000 pips every day. The reality of trading is it's a long, hard, frustrating grind where every day you're coming into the market, you're strapping up your boots, and you're getting ready for battle. There are days where you will win the battle. There are days where you will lose the battle. But remember, the battle is only a small part of the war. The bigger picture is the war. And that's what you're fighting for. And in order to win the war, you have to come in and just consistently execute your plan. Consistently execute your plan. All right, let's take a look at pound yen next and head over to gold. Again, if you're just joining us, we're kind of in like we're just doing live trading here because we're having some technology issues with our live room. And I decided to do something fun and just get on YouTube because you guys are awesome for the most part. We have some trolly people, which I'm sure will show their faces, but YouTube has granted me access to a button that allows me to ban you from the chat. And I've got an itchy trigger finger. All right, so pound yen. Nothing really on my radar here for pound yen. I'm not sure what time frame the trader that mentioned pound yen was looking at. We could have a potential Gartley here. Let me just see if we came down. Yeah, it could be a potential Gartley formation here on pound yen 4-hour chart. Looking at X leg up at 147.61, X to A to B, B to C, C to D up here. It's going to complete basically like a bat formation. So maybe this is what you're looking at. It's technically a Gartley, but the completion is going to be at the 886 at 147.20, so more like a bat formation. But a deep Gartley formation, this is a really good opportunity here to sell on pound yen. Let's go down to, I should do some range bar charts for you, really blow your mind. But I don't feel like being here that long. We go down to the 60-minute chart. You can see price action recently came up to find previous structure, look left, structure leaves clues. We consolidated at this level, right? We then had a breakout of our bullish flag formation. For traders looking to buy, right? Again, it sound like a broken tape recorder. Wait for the pullback. Wait for the pullback, the re-pullback, right? Caught halfway between retracement and pullback. Wait for the re-pullback. And then look to buy it up in advance of our previous structure highs. Up in this 146.30 or 146.50 level here on pound yen. Let's take a quick look at gold. Gold. Talked about the head and shoulders pattern last week. Worked like a charm, right? Here's our head and shoulders, left shoulder, head, right shoulder. This pink line in the middle is our neckline. We had a break and close above that level. We came down to retest previous structure. Then we extended up. I think we can see a move to our next level of structure up here. Currently, we've kind of just consolidated and tailed off a little bit. So another buying opportunity down here for those looking to catch the next wave up, the next extension up. For those who are waiting for a selling opportunity on gold, I'd wait until we get into our previous level of structure resistance, and I'd look for a selling opportunity there and a little relief in the market. Missing lots of these chats here. CAD Swiss broke key resistance on daily chart. I saw 60-minute bat, but choppy X to A leg. Going back to for me, there's no bat formation here on pound yen 60. I can probably guess what you're looking at. You're looking at this right here, X to A. This would be my guess. That in X to A to B, B to C, C to D up here. That wouldn't be a bat formation for me. All right, let's go to dollar yen next. I'm probably going to hang out only for a little bit more here. I think an hour will be good enough, right? And guys, if you like this type of stuff, right, here's an easy way to stay involved. Head over to tradingpower.com, right? Take the 1-week free trial in our live room. We do this every day. Jason Greystone runs a London room where he trades 3 hours of the London session. I run a New York room. Go over to the website, right? Tradingpower.com. Take a free trial in the live room, right? Well, and if you don't have time to actually spend 3 hours a day trading, the next best bet is going to be the syndicate program. It's not going to be live trading like what you're seeing right now, but you get a morning war room meeting. So each and every morning at 8:30, Jason Greystone comes in and takes you on a delicious stroll around the market, showing you the top trading ideas that's on his radar. You get video updates from myself, right? I did one every day last week. We had a lot of opportunity last week, but you get video updates from myself down here of what's on my radar. And then, of course, we shoot all of our trading ideas through, we have a website called the Trade Floor as well. And you could do a 30-day trial in that for just $1. So For you guys that are on the edge, or you're thinking about, hey, I want to get involved, but I'm not really sure. Take advantage of the free trial offers. Invest $1 and learn something that can potentially help your trading. All right, dollar yen. Do it. Do it. Kevin says, you know what the hard thing is, Kev? A lot of people are afraid to do it because they're afraid of commitment, right? It's very easy to lose because that's what most of society is doing. However, what I've noticed is that a lot of traders are afraid to commit, even if it's something like a free trial or a $1 trial. They're afraid to commit because now they feel the pressure to actually do something. And that's very hard for many people. Very, very hard. Do you trade the news? No, I am a technical trader. So all of my trading decisions come off of what I see on the price chart. Now, I follow the news. I pay attention to news because I want to know what the market's doing. I want to know, are there situations where my safest scenario is to be as far away from the markets as possible? That way I don't recklessly lose any money. But I don't make decisions based on the news. So I don't say, yeah, you know what? I think we're going to see a surprise rate hike on Thursday from the pound. So I'm going to start buying pound dollar right now. I don't do anything like that. I may use it in my analysis, but I don't make decisions off of it. By the way, seeing how I have a long pound position, that would be awesome if that actually happened. But yeah, pay attention to news, but I'm a technical trader, first and foremost, technical trader. Another question, Akil, do you have any advice for college traders? How to afford education, how to juggle trading with school? Well, if you're in school, if you're in college, school needs to be the primary objective because you're paying a good fee to be in school, right? You're loading up debt to get that degree. So school should be the primary focus, but I think you can train yourself on education in your downtime. College offers a lot of downtime unless you're working on time, but you can continue to get experience in the market. So, you know, you may not, typically a college student is probably not going to be able to afford a full training course, but you can do stuff like, again, taking a 1-week trial in a live room, taking a month trial in the syndicate or signing up in the syndicate service, somehow being involved, even if it's just following us on Twitter. We have a great trading community on Twitter, but staying involved while you learn. And some of the traders that I see that are most successful are the ones that can't afford the course right away because they're hungry. And what they do is they say, I get the same message. Akil, I can't afford the course right now, but I'm saving up for it. Right. And I'm going to buy it at a later date. And I'm always like, yeah, I hear this 1,000 times a day, whatever. Right. But then you see that trader follow through. You see that trader coming into the live room saying, hey, I had a week off from work, so I want to join you. You see that trader following us on Twitter, right, involving themselves in discussions and just continuing to learn, right? You see that trader shooting me emails saying, hey, Akil, you know, I just want to keep you updated. I just watched Into the Gray and blah, blah, blah. And what that trader is doing is they're prepping to take the course. And by the time they take the course, because they've already spent that much time focused in building good habits, right, they're able to get through the content and digest it a lot quicker and get on the path of success a lot quicker than, say, a trader that we have to spend 90 days breaking a bad habit and another 90 days installing it. So just continue to be involved, continue to work on your craft, right? If you can develop good habits now, that's going to be a big benefit to your trading journey because now you don't have to spend as much time breaking the old habits. So, but stay involved. If you're on Twitter, you know, just, I mean, stay with us on Twitter, hop in the live room if you can, join the syndicate if you're able to, but just stay involved as much as you can and just keep working on your craft. I use NinjaTrader. Yeah. Philip is a great example of someone that was, he told me a year before that he was going to take the course. And I was like, all right, whatever, man. I'm never going to hear from this guy again. He stayed involved. And then he got involved. Now he's a great teacher, great trader, great teacher. He's a good dude. He's a good dude. He's so passionate. So passionate. But you need that. If you ever meet Philip, you'll look at him and be like, this dude is crazy. Because he's just so passionate and he understands that like trading has changed his life. And he knows that. And he's like, he wants everyone to be that way. It's awesome. It's awesome. He's like, you guys don't understand. So it's cool. He's about to get married soon, I think. I think he's engaged. He said, hey, babe, you know I'm a trader, right? Oh my gosh. That's how it typically works. All right. What was I doing here? Ninja Trader. All right, let's take a look at CAD Swiss. We got this one trader, Jacob, just keeps wanting to look at CAD Swiss. CAD Swiss has major structure support to break. All right, what time frame would you like me to look at? I'm going to do this. I'm going to do this favor, Jacob, because I personally don't care about CAD Swiss, just because I don't trade it. Nothing wrong with the pair. I just don't trade it. And selfishly, I don't care about pairs I don't trade. But you keep typing it in. So I feel like there might be something important on there. So I want to answer your question because I'm in a good giving mood today. So let's do it. What time frame should we look at on the CAD Swiss? Broke daily resistance. So let's look on the daily chart. Canada Swiss. All right. So we've broken and closed above daily resistance. Let's actually load this up on a ninja chart as well. It may take some time. We've recently broken and closed above daily resistance. All right. So we identify, right? We identify what has price action done. You can see the break and close above our DSR level here in box. We identify price action has put in a higher high, higher close. So what is your prediction now, Jacob? IPDE, identify, predict, decide, execute. What is your prediction based on the information that this chart has given you so far? I was, Ryan, but we're going to do CAD Swiss because, again, we got a passionate trader about this pair, and I reward passion. I'm happy that he's so passionate. I mean that in a serious way too. So what's your prediction? Do you think price is going to go higher or lower? Let's not worry about anything specific yet. Let's go through the process. IPDE, identify, predict, decide, execute. Do you think price is likely to go higher or lower? That's the only question we want to ask right now. Because if we don't have that question, we can't even decide how we're going to get involved, right? If I don't know that, here's why we do the IPDE process, guys. Right? Because it sets up our bias for the trade, right? When I look on the higher time frames, for me, my higher time frame is a daily chart. When I look at the higher time frames and I go identify, predict, right? That sets up my bias for the rest of the trade. So I look at this chart right here. I say, I identified a higher high, higher close, right? My prediction is that price action is likely to go higher. And you know what I've done by doing that? I've shut up half the yelling voices in my head, because every time we look at a chart, right? We have it, you know how they have like the conscious, right? We have like the devil on one side and the angel on the other side, that the devil's trying to tell you to do bad things and the angel's trying to tell you to do good things, right? You know, for like the old cartoon stuff, right? That's how it is with trader, right? You have the bull on the left side, you have the bear on the right side, and they're both screaming at you, Akil, you got to sell because of this, you got to sell, 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 and the bull's like buy, 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 retracement, buy, 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 buy. And you have all of those voices in your head, and it's very easy to get flustered, for it to get crowded, and for you to not really know what to do. Ooh, the id and the ego, those are psychological words. It's above my pay grade. I do remember those though, right? So the first thing I want to do is I want to tell one of those little screaming beasts to shut the heck up, right? That's the first thing I want to do. So when I do my identify and predict, the higher high, higher close allows me to make the prediction that price action is likely to go higher. So I see that little bear on the right side of my shoulder. I say, boop, flick him off. Boop, shut up. Get out of here. And you're funny, Kevin. And I've just eliminated half the battle. Does that make sense, guys? I know we're having fun with it. Does that make sense? I've eliminated half the voices in my head. I'm focused now on only buying opportunities. Let me count the 5 for the 5-second delay. Drink some tea. My voice is killing me today. That's good tea. Yeah. So it makes perfect sense. So now that I have that confirmation bias, what if it is a false breakout? Well, then we'll lose some money if we're buying. If it's a false breakout, then we lose some money. Or we never get involved in the trade. You want to know something? Here's the issue, and this is why we can't stress over it. We're not going to know that it's a false breakout until it's already a false breakout. So that is just fear. All that it is fear. It's not a bad thing to keep in the back of your mind, but understand it's fear. Oh, what if it's a false breakout? Then we're stopped out. We're not going to win on every trade. Yeah. We're not going to win on every trade. So the prediction is that we're going to go higher. So next question is, if we're going to go higher, then where are we likely to go higher to? I personally like to look left for structure to leave clues, and I see our previous double top up here. So I see 79 even. I see 79 cent, right? You think that's a good level, guys? 79 cent. I think we can go as high as that. 170 pips of upside. So now I've decided, right? I have a confirmation bias. I only want to get long. I know exactly where I want to get long to, or how far I can get long to before shifting my bias. So I keep that with me as I go down to the lower time frame. So now we go down to the 4-hour chart. I think Jacob said he wants to go to the hourly. You go down to the 4-hour chart, and then you look for your reason for entry. And let's just head down to the hourly because I think that's what he was looking at. You look for your reason for entry. So now you ask yourself, all right, what do you need to enter the trade? What does your trading plan say? What do you need to enter the trade, Jacob? If this, then what? And that's the next question you want to ask yourself. Now, if you're lost on this part, if you're like, yeah, Akil, I don't know. I usually just flip a coin and buy it. Then you don't have a trading plan. This is the importance of developing a trading plan because it tells you exactly what you need to do. I just asked Jacob a question, right? I said, Jacob, you told me you identified a higher high, higher close. You told me you predicted a move higher, right? You told me you're looking to buy. Well, how are you going to buy? What do you need to buy? And with no hesitation, what did Jacob write in? Double bottom. Boom. That tells me Jacob has some type of plan. He's not just randomly looking in the markets. He has some type of plan. If price action pulls back to level previous structure, then look for double bottom. And again, there's different ways to approach it. We're just using this one example because that's what the trader wrote in. But that's called having a plan. So Jacob knows exactly what he's looking at in order to take the trade. Now, for someone that may be more, I don't want to say advanced, because for a different technique, does anyone see anything else here that's potentially setting up? Five-second delay, I know. Some good tea. It's cold, but it's good tea. Well, what if I were to do something like this? X to A to B, B to up. No. Messed it up. I messed it up. Got an itchy trigger finger. Let's try that again. Let's try that again. There we go. We'll just do it this way. Keep it simple. Oh, Give it to me. I always break stuff, guys. Anyway, we'll do it old school way. Since I just broke stuff. I'm the worst. X to A to B, B to C, C to D, right? Gartley formation. Bullish Gartley formation. You can use this bullish Gartley formation as a reason for entry to get involved in the potential trend continuation trade. Boom. Boom. I feel like that's how Donald Trump would be if he was trading the markets. Boom. See that? Boom. Buy. Buy it now. Buy. Boom. Gartley. Buy it. Anyway, sorry. But yeah, this is a potential Gartley formation. Now, you can easily trade this. There are a few ways you can trade this. You can trade it as just a Gartley by itself. Look for the T1, T2s. Trade it traditionally. You can trade it as just the entry reason into the trend continuation trade. So you're simply using the advanced pattern formation as an entry reason to get involved in the trade. Or you can do half and half. If you're a trader that uses multiple target projections, you can take a single target off at a conservative level and then look for the trend continuation trade on your with your secondary targets. So lots of ways you can do this. All depending on what type of trader you are and how you want to handle this opportunity. All right, let's go back to dollar yen. We'll probably make this our last pair here. And then I'll leave a few minutes open for Q&A because I know a lot of you guys don't get to witness this type of greatness live all the time. So I can't even say that for a straight face. That's why I'll give you some time to answer Q&As. But Johnson says, I believe it will follow a major uptrend from start of June. However, with that major trend, we have smaller trends. The next one I predict will be a bearish move on CAD Swiss. I say sell it up then, John. Sell it. Look for selling opportunities. If your analysis causes you to think that this pair is going to go short, look for shorting opportunities. Yeah. And here's the thing. I don't argue with traders. Why? I don't care. Right? I understand that there are plenty of ways to be consistently profitable in this market. You can trade advanced pattern formations. You can trade CTS, combined technical score. You can trade Bollinger Bands, Deutschian channels, moving average crosses, MACD crosses, right? Millions and billions of different ways, right? I can care less how anyone else trades. I can care less about anybody else's opinion on the market. I think you guys should care less about anybody else's opinion on the market. All that matters is, are you following the rules of your trade plan? Because if you've done the work, your trade plan is your blueprint to becoming consistently profitable. Your trade plan tells you exactly what you need to do in order to consistently extract profits from the market. So as long as you're doing that, you're right. As long as I'm doing that, I'm right. So I can look at a chart and I can say, man, no way I would get short. John could look at a track and say, getting long, crazy, madness, voodoo talk. And we can both be right. And John shouldn't let my opinion take away from his analysis. And I shouldn't let John's opinion take away from my analysis. We just trade the plan. All right. Grow up, Michael. I wish I was a good trader like you guys. Become one. Why aren't you? I'm not here for the pity party. Why aren't you a good trader? Have you done everything you need to put yourself in a position to be the most consistently profitable trader that you can? If your answer is no, then step your game up. Do something about it. There's no pity. If you want something in life, you go get it. And you do everything possible to make it happen. That's my philosophy. Don't wish. I wish I can do this. I wish I can do that. While you're wishing, someone else is out there doing it. Someone out there is out there doing it while you're wishing. And then you become, must be nice. You become that person. I used to hate that person. One of my best friend, he's the one that actually introduced me to Forex trading. His career did not go as well as mine. But as my life started changing, my lifestyle started changing, right? As I started wearing fancy necklaces and gator shoes and pinky rings and all the extravagant stuff that you can buy once you're a consistently profitable trader, he started turning into the must be nice guy. He said, must be nice. Yeah, you got a new house? Must be nice. And it was real annoying. And I had to sit him down once and said, hey, look, man, you could have had all this too. We started trading together. You introduced me to Forex. We were supposed to be trading partners. The difference is I did what I was supposed to do and you didn't. So all that must be nice stuff, yeah, it is nice. And I worked my ass off to get this nice stuff, to put myself in this position. So zip it. Hush. Do something about it. Don't sit back and be the must be nice guy. He got lucky guy. Do something about it. Because I find it really funny how, I find it really funny how the harder I work, the more lucky I seem to get. It's very interesting. I wonder if there's some type of correlation there. Whenever I work harder, I seem to get luckier. Must be coincidence. Yeah, Euro yen had a nice short this morning. Let me just bring over to where's it at? Bat formation here on Euro yen this morning. Someone else mentioned this too. They're looking for a 26.18. There's a nice bat formation sell this morning on Euro yen. Up at 130.53s. Overall, I still have a bearish bias on Euro yen, but as a intraday day trading opportunity, I think it was a good opportunity to get short. But let's do one more. Let's look at dollar yen. Recently, we just had a lower low, lower closing dollar yen. I'm looking for a pullback and a continuation short. I think we can go lower here to our lower DSR level, that big green box down here, around 109.50s. You can see we just broke structure to the low side here. So I'll show you what I'm looking for here in dollar yen. Let's bring over a 1 hour chart. And I'm actually looking for a Fibonacci inversion type trade. So you can see the market trending downwards, right? Lower lows, lower highs, lower lows, lower highs, all the fun stuff, right? Followed by the new structure low right here. And now we just saw a reversal. Come on, get up there. Here we go. We just saw a reversal, which violated our previous outside return, sending us into a bullish rotation. I think this is a little bit of a trap. And I'm actually looking for a move back up to retest previous structure highs up here. If I take my Fibonacci extension tool and invert it from the swing low, I'm going right to left instead of left from right, swing low to swing high and back down, you're going to see I'm going to have a 1618 Fibonacci inversion right up at 110.67. If I draw a straight line here, 110.67s, you can see look left, right? Structure leaves clues, right? Previous structure resistance up there. And then, of course, you can see our previous structure right here as well, and also a green DSR level from further back. So a nice opportunity to look for a short. Again, it's going to be something that's very low risk. If we get the opportunity, stops just need to be above previous structure highs up here. Stops red. Red, what are we going to kill? Purple works. Stops need to be above previous structure highs right there. Needs to look for any of three levels. If you're super conservative, you can look for a move back into this structure level. You're still going to get a good risk reward there. You can look for a move back down into previous structure lows here. Still going to get an even better risk reward there. And then if you're looking for the full extension, right? When I say 109.50s, 109.50s, I think it was. You can look for the full extension lower, somewhere there. So however you set it up, it's going to be a pretty ideal, running out of greens here. It's going to be a pretty ideal risk reward scenario there. So I know 1618, that works perfectly. So that's something else that's on my radar today. $1 again. So, all right, we're gonna do some Q&A. I'm glad you guys can join me right now. Euro dollar just hit target ones with the bat formation. Not euro dollar, euro yen, excuse me. We're getting close to target ones on our bat formation here. But I'm glad you guys can join me. Again, we're doing something a little bit special because we had some technology issues with our live room. So I said, what the heck? Let's just go live on YouTube, give the people what they want. And it ended up being a very fun session. I enjoyed myself. I always like working with newer traders. Boom, there we go. Boom, targets hit. Stops roll to break even. Just do that. All right. Yeah, always enjoy. Sorry, I'm out of my OODA loop. I was saying thank you, so we'll leave it at that. But I'll leave some time for a few questions. Let's do about 6 minutes. We'll go to 9:30, and I'll get on with the rest of my day. What is the best way to design your trading strategy? By finding a style that you're comfortable with and that you believe in. I spent years trying to be a systems trader, but I never really trusted systems. So I was trading a strategy that was completely against kind of my philosophy, where the system was purely momentum based, didn't take structure into account and stuff like that, where my philosophy was more based on the power of structure. So I was trading a style that was completely against what I believed in. So I think the best way to start developing a strategy is find what you're good at first and foremost. We're all good at identifying different things in the market. Find something that you're good at, and find something that you believe in, and then start with that. What's your daily schedule like? Well, I actually did a good article for this for FX Trader Magazine. I don't know if I still have the link to it. But I wake up, I respond to all the nasty messages I get here on YouTube. No, I respond to the great messages here on YouTube, try to answer some emails. And then I do my initial round of morning analysis. So I do my top down analysis. I set myself up for the day. I take a look at what trading opportunities are on the radar, what news events need to be, I need to be aware of. And basically I create my watch list. Then from 8 to 11, I run the live trading room, where we trade live, so very similar to what we saw here. It's a little bit more interactive in the live trading room, again, because we don't have this delay, and I have more of an intimate relationship with our traders in there. Many of them have been in there for years, so it's a great community where we're helping each other out. I do that from 8 to 11, and then for the rest of the day, I do whatever the heck I want. Yeah, seriously. I mean, I typically have stuff to do, whether it's working on the business, whether it's creating videos for our course members, whether it's coaching track and field, which I do as well, or errands around the house. But basically, the rest of my schedules, I can do whatever I want. I typically fill it up. I go work out usually directly after the live room to get rid of some of that stress. But yeah, I do whatever I want, and then I do another round of analysis at the end of the day to set myself up for the London session, for the overnight session, and then eat and repeat. Eat and repeat. Hey, Tony. Is it better to start trading with a demo account or a micro account? Either or. A micro account is very, very small that if you lose money on there, it's not gonna hurt you. And you do get kind of the experience of winning and losing live money, which can be beneficial. So either or. Just make, as long as you're not using money that you can't afford to lose. So never trade money that you can't afford to lose. In 15-minute day trading, particularly of this sort, how many pips can we expect? If so, what can be the lot size? Well, the lot size is going to be based off your account size and how much you're trading and your max drawdown and a handful of other statistics. So there's no way I can tell you what your lot size would be with no information. Same thing with pips. You expect to get whatever the market is willing to give you. So you evaluate the trading opportunity, whatever the trading opportunity is willing to give you, that's how many pips you can expect. If you have a trading opportunity where you can expect to get 10 pips, then you can expect to get 10 pips. If you have a trading opportunity where your projection in the market says that you can make 50 pips, then you expect to get 50 pips. Why are you bearish on Euro Yen? Overall, I'm bullish on Euro Yen. I'm bearish because of the bearish bat formation here. So my general analysis is bullish on Euro Yen, but on this particular chart, we have a bearish advanced pattern formation. So that's why I was bearish. What age did you start trading and how long was it until you saw results you're happy with? I started in the stock market at 20, you had to be 21 in the stock market. I went to FOREX a few years later. I'm still not happy with my results. I'll never be happy with my results. That's just the way I am. I believe once I get happy, I settle. So I try to never be happy, excuse me, about my results. But it took me about, after I got into Forex, once I got introduced to Forex, let's say, took me about 2 years, to start seeing consistent results. All right. I started with $500 of a lot size of 0.05. Is that okay? If that's what's that, five micros? Again, it depends. I just can't, guys. I can't answer lot size information for you. We need a lot more information than just your account size. It depends on, hey, how many pairs are you trading? How many trades are you allowed to be in at once? What is your average loss? What is your maximum drawdown? You need more information to determine lot size. So I can't just say, hey, it's not as simple as just saying, hey, I have $1,000. I should trade a mini lot. All right. Yeah, join us in live for a free week. Tradingpower.com. I'm going to buy the advanced pattern course. Is it different? Yes, the advanced pattern course is strictly a course only teaching advanced pattern formations. We looked at pound yen earlier. We did not see a big cipher. I'm not sure if we were looking at the same time frame as you were, Joseph. We saw a Gartley formation, a deepish Gartley formation. All right. Anything else, guys? We're going to get ready to shut down shop. I'm going to go force myself to work out. I don't feel like it today. And again, guys, I can't answer how many trades should I usually take with 1.5% risk. That's a personal question, guys. How much are you willing to risk? How much are you willing to take as a maximum drawdown? If you're willing to blow everything, then you can enter all the trades in the world. But don't worry about it. It's you don't know what you don't know. That's what it is. You don't know what you don't know. So don't get frustrated, Akil. Do you mind how much you made on your best month, money-wise or pip-wise? I have no idea. I just focus on taking good trades. My best month. I can say my best trade. My best trade was like a 600 pip winner. I have no idea what my best month was. When I go into the market, guys, target 2 is hit on euro yen. When I go into the market, I just have one goal: find a good trade. I really don't worry about money. If I'm trading the right way, money will come as a result. If I start focusing on money, that's when you start running into problems. So I don't know what my best month was. I know my best trade just because that was the first trade that I call it my best trade because that was the first trade I ever followed my rules. But I couldn't tell you my best month without looking back through stats. Akil, what is the advantage of buying the advanced pattern trading course? Is it really to have special rules? Yeah, it's to be able to trade advanced pattern formations the way that we teach it. Yep, winner, chicken dinner. Somewhat pain-free. I do not use Ichimoku. I don't use any indicators aside from I use an RSI. That's about it. They're just not in my trade plan. I'm a price action trader. So I read price. I use the relative strength index, but that's about it. I don't think there's anything wrong with using indicators, just not for me. Do you trade if there is big news? Depends on the news event. Something like non-farms, no, I will not be trading during that. But it depends on the news event and what you consider to be big news. But I don't try to put myself in positions. I don't trade in positions where I don't feel like I have the edge. So news events like non-farm payrolls, I no longer have the edge. It's a crapshoot of emotions. So I get out of I get out of there. All right. Well, I'll see you guys tomorrow. Many of you guys tomorrow. Hopefully our normal live room is working. Again, if you guys want to join me, just head over to our website, tradingpower.com. After you finish taking advantage of all the free content and the free training lessons, the free workshops we have over there, right? For you guys that complain, the free workshops, free training lessons, sign up for your free week in the live room. Can you suggest some pairs to trade in the 5 minute? Any pair. They all move the same. Just make sure this, as long as you have a tight spread, if you're going to be using that short of a time frame. Any pair for tight spread. All right. Take care. Appreciate you guys joining me. And yeah, this is just for today. We're not going to do this every day. No. I've got a business to run. I need the money to come in. Got to buy some more houses. All right, guys. Take care.